I'm just wondering, are the banks, commercial banks, going to hands off from lending? Because if we have a very effective DFI sector, as the case may be, are we going to see the banks saying, okay, let's sit and concentrate on our own traditional banking roles as a case? Do you think that that's going to happen if you have a vibrant development finance institutions operations in Nigeria?
They may reduce their exposure to that for some of the major particular space. But you know, CBN in the past has set up some intervention fund which has been routed through the banks. Okay. So for now, with the development of the DFIs, they may decide to route the fund through the DFIs, okay, which specializes in their particular sector, such that the banks may not be able to specialize in all the sectors, so as not to accrue non-performing loan or toxic assets. So they need to also just build a niche for themselves and just lend to that particular space, while the DFIs that build competence in a particular space or in a particular industry, they will be able to understand, and as such, the delinquency rates will be a bit low. And then you can be able to also lend out the fund as you get it back.
Okay, Muyiwa, do you think the requirement, a minimum capital requirement for the wholesale Dutch, sorry, I'm looking at the foreign exchange market now, the wholesale, because it sounds much the same, the wholesale development finance institutions, 100 billion naira, while for the retail development finance institutions, we have it at 5 billion naira. Is that enough? Do you think that will be enough for them to start off going by the huge responsibilities that they will have to handle?
Yeah, thank you. I think it's okay. Not that it cannot be improved, but at least for a start, these proposed capital requirements are okay, because for DMBs, 25 billion naira. But for this, for you to operate as a wholesale development finance institution, what it means that you should have sufficient capital that will enable you to do one.
And that's higher than the commercial bank's capital base.
Yes, actually it's higher than the commercial bank capital base is 25 billion. Yeah, that does not mean this is the minimum. That does not mean it cannot be higher than that. And you need this huge amount of money. Why? Because for you to operate in this segment, development of those priority sectors, one thing you should know is that, one, this is an high-risk segment of the economy, because we're talking about micro, small, medium-scale businesses. So they need enough, sufficient capital that will enable them to put up a watertight risk management framework. And they need to engage professionals, qualified professionals, experienced professionals, competent professionals, who will be able to drive the activities. Because if they don't do that, there will be a lot of operational risk, because there will be a lot of compromise, because you know that in the business of money, there is a need for a very strong and watertight risk management framework. That is why we had problem previously in the banking sector. And you will see that the central bank had been able to actually scale up their risk management and supervisory role on the commercial bank. So this capital requirement is actually needed for some of those things. And you will now remember that they will not be doing their business as usual again. They need technology, they need a lot of resources, and these are the things that will be looked at for international financial institutions to also route their money, because you want to look, if you say you want to manage, say, 200 billion naira, what is your capital base? Do you have the capacity? So these are done, or the central bank is trying to do this to actually ensure that the DFIs, they have the capacity to handle large-scale transactions. And you remember that this is not actually the money they are going to be lending out. They are going to source for fund. They can raise bond, They can also partner with fund provider abroad, because the truth is that even the commercial banks who are lending into that segment now, you discover that they raise their fund from foreign partners. Maybe you get the facility at 6%, 4%, you mark it up and you advance it to local entrepreneurs. However, when DFIs are properly set up and they have the capacity to run, you will see that a lot of fund will come through them, long-term fund, that they will be able to advance to small, medium scale, and micro enterprises in Nigeria. So I think the proposed capital requirement is just okay for now.
Let me quickly come to Ayo, because our time is really up, and I just wanted to make one more comment before we go finally on the show. In terms of risk management, which Muyiwa was trying to mention, earlier on, does the draft guideline provide for enough protection from financial exposure? When we look at what happened in the banking sector, do you think that this draft regulatory framework provides for enough protection from exposures?
Yeah, I think it is sufficient, because when you look at, based on the operational manual written in the draft, they talked about the credit management, the asset liability management, financial management, and also the SFU, such that you're able to money laundering, you're able to lend that. Apart from that, they also said when you start your business, you cannot lend out. You cannot lend out more than 40%. You cannot invest more than 40% of your total asset. So they are trying to see how they will be able to manage the risk in this particular space. And you know, when you render your account on a quarterly basis, you are giving 14 days ultimatum for unaudited result, while 4 months for audited result. So the CBN just need to do a close monitoring at these particular DFIs, so that they are able to see when they are getting exposed, they are able to see if they are overtrading, they are able to assess their credit risk management. And also they said the reporting will be in IFRS. So when you look at it, it's mark to market. They'll be able to know if they're able to know the cost of risk, see how it's been growing, see how those loans that you have lent out is performing. So it's very significant, and I think it's very robust enough
for them to take off. Thank you, Ayo. I'm afraid that's all we can take from you.
Thanks for having us.
Thank you. Ayo Ebo is the head investment research at Afrinvest West Africa, and Muyiwa Olanrewaju, to my immediate left, is the CEO of Watershed Capital. Thank you, gentlemen, for coming on the show. We do appreciate it.
Thank you. It's our pleasure.
And that's why we'll draw the curtain on today's edition of Business Morning. I want to thank everyone out there for also being a part of the show. Thank you so much for watching. I am Bolaji Akinwale. Bye for now.